Like, what differentiated the analysts who succeeded and thrived versus those who merely survived? And today I'm speaking with Nathan. He's someone who embodies the modern evolution of a Wall Street career. He's now operating at the intersection of AI, healthcare, and business building. And so Nathan Rick started his career on Wall Street as an investment banking analyst at none other than Goldman Sachs. Today, he's a biz ops lead at Anon, and he's a former head of growth and strategy and operations leader, a co-founder who's built businesses to 7 figures. Let's dig in. Nathan, welcome to the show.
Part of what I was thinking early in my career was the idea of optionality. Let's admit there is sometimes where interview processes can feel like a bit of a crapshoot at times. And then he's pushing me to work faster. And I eventually got to a point where I kind of snapped at him like, dude, I can't deal with this right now. I'm going to hang up the phone. And it was something that I'm not proud about. I'm sorry, I should not have done that. And I think owning up to it is the main thing. That really shows that you care. It's very fulfilling to be your own boss and to drive your own destiny. It is also very stressful.
Welcome to another episode of Wall Street Diaries. This is a podcast about extraordinary individuals who launched their careers on Wall Street and then use that as a springboard to build something incredible. And I'm Max Adams, the head coach of Wall Street Mastermind, and today I'm speaking with Nathan. He's someone who embodies the modern evolution of a Wall Street career. He began with a traditional finance foundation, then he layered in technology, operations, entrepreneurship, and he's now operating at the intersection of AI, healthcare, and business building. And so Nathan Rick started his career on Wall Street as an investment banking analyst at none other than Goldman Sachs. He worked on M&A, complex financials, transactions in fintech and asset management specifically, before moving on to venture capital, investing in early stage companies, and learning how to build scalable businesses. But instead of staying purely on the investing and finance side, Nathan made a series of deliberate pivots. He went into strategy and operations, growth and leadership at high growth software companies, and ultimately began an entrepreneurship journey. Today, he's a biz ops lead at Anon, and he's a former head of growth and strategy and operations leader, a co-founder who's built businesses to 7 figures very rapidly, and an operator who's deeply focused on how AI is reshaping healthcare and knowledge work today. So we have a lot to talk about. Let's dig in. Nathan, welcome to the show.
Thank you for having me, Max.
Yeah. Well, so let's start right at the beginning. So going back, as you know, we met in college and I saw some of the beginnings of your finance career. And so when we were in school together, what did you think that your career would look like? And did investment banking even feel like an obvious path, or was it just one option among many?
No, to be honest, when I started college, it really was not clear where my career would go. I mean, I pretty quickly nailed down on finance being the path I wanted to go. I wanted to gain a hard skill set that could be very applicable coming out of school. So very quickly kind of nailed down on finance being the right path for me. But in terms of where I would exactly go with a degree in finance, it wasn't entirely clear. I think the only thing that was clear to me at that point was that entrepreneurship would be in my future. I knew that at some point I wanted to do something entrepreneurial. And luckily that has come to pass. But at first it was not clear at all what path I should go. I think the first time that even investment banking came on my radar was through an internship. The very first internship that I got was with an investment bank out of Georgia that does middle market deals, and I was helping to source potential deals for them. So that was my first exposure to the world of high finance, investment banking, private equity, and then a whole series of decisions led off from there.
That's great. And so let's back up and put ourselves in the mindset of young Nathan before you'd gone on to achieve all this incredible success. And so at that point, you said that you knew that you wanted to do entrepreneurship in the long run. And so talk us through briefly, what sparked that interest in entrepreneurship? How did you know that early on that was going to be an end goal for you?
You know, I think back to my early childhood and the time that I would spend with my brother. My brother and I would share a room. I remember we would often spend many hours discussing different business ideas that we had. It was often at that point in time we were talking about, oh, wouldn't it be cool if we had this type of restaurant, or if we were to start up this type of club? We thought through those type of ideas as kids. But I remember also as a kid, like looking at things such as like Forbes magazine and seeing industry titans and reading about them and how they built their businesses and thinking like, wow, that is the type of future I want for myself. I really want to have an impactful career. And I see that entrepreneurship and building something from scratch was the best, most effective way to have impact in the world. And so I've always felt from a young age that I would do something along those lines. I would start my own company, and I could through building my own company have the greatest impact on the world.
That's great. Well, and I definitely, we're going to return to that and hear how it turned out in the end. But I love that you had this idea of building your entrepreneurship journey on the backs of restaurants and clubs. That's such a fun and very evocative sentiment there. But the other crazy thing that you mentioned, though, is that hey, you've got this dream to do entrepreneurship, but you started in finance. And so help us understand a little bit, why should someone who's interested in entrepreneurship long run begin their career in finance, specifically investment banking?
Well, part of what I was thinking early in my career was the idea of optionality, really, because even taking a step further back, before I did an LDS mission, and before that point, I was even thinking that I wanted to do biomechanical engineering. That was my career path. I was really into STEM and the sciences. But I think I discovered pretty quickly that the idea of me being stuck in a lab, focused on a single problem, potentially for years on end, was really not appealing to me. I just have such diverse interests in different subjects and in different types of problems. And I felt like anything within STEM, for the most part, would have me locked into a single thing for years and years on end. And that just didn't seem appealing to me. I saw business as a great way to get exposure to a lot of different industries and to a lot of different problems. Every industry, every vertical that there is needs people who understand business and understand finance. And so I saw it as a good way to have optionality and to be able to expand my career into anywhere that I might have interest.
Mm-hmm. Gotcha. Okay. So it really came down a lot to the optionality, where if you lock into a STEM degree, often you kind of have a STEM career. And obviously that's not always true, but it's hard to shift out of it. Whereas especially going into investment banking, of all finance career paths, you can kind of do anything. And I've seen this personally a lot with the students that I've coached over the last decade or so, and also with myself, where I've gone from investment banking into private equity, which I get is not that different, and then on to working at tech companies and coaching and things like that. And I've seen so many friends like you who have gone and operated in entrepreneurship journeys and things like that. And so truly getting that stamp of approval in investment banking, I agree, does provide unlimited optionality later on in your career. So
yes, most certainly. I mean, and when it came to deciding on investment banking, it also came quite a bit down to optionality and having it be a springboard to other things. I mean, as it came, so I did that first internship with that investment bank based out of Georgia, doing middle market deals. And then the next internship I had, I think, was even more formative. I had worked with a search fund called Altalink Capital on campus, and it was extremely formative in helping me see the world of investing and seeing what it entails to be an investor. And I was really attracted to that. I really enjoyed seeing what it was like thinking like an investor and being able to see such a wide range of different industries and becoming expert in those particular areas. It really scratched my intellectual curiosity. And I saw investment banking as a great path to be able to become an investor someday. And so that was really kind of what got me dead set on investment banking was that internship in particular. Yeah.
Well, and you were early on the search fund journey as well, because back when we were doing those kind of internships in undergrad, a decade ago or something like that, that was pretty actually before the boom of search funds. If you look at the graph of number of search funds over time, it sort of really took an uptick sort of during the COVID era. And now I think there's probably more search funds outstanding in the last couple of years than in the entirety of search funds combined up to that point. Don't quote me exactly, but you were early on that bandwagon, and now I would say people really recognize the value of getting that early finance experience, looking at investing and things like that. And as you and I both know, in order to get into those investing roles or to be a search funder, if you ever want to do that yourself, a lot of the times that starts in investment banking. But you didn't just settle with any bank. You, of course, had to go for the moon. You went for Goldman Sachs, which is, as everyone knows, perhaps one of the most prestigious banks on the face of the planet, especially in the bulge bracket land. And so how did you decide on Goldman, and like what attracted you to that opportunity?
Yeah, look, I'll be honest with you. My decision to go with Goldman Sachs was a little bit haphazard, I'll be honest. I was actually intentionally going after middle market banks to start. I thought the idea of working in a middle market bank or a boutique bank that had a little bit more autonomy, a little smaller of an organization would give me a better learning opportunity. At least that's what I thought at first. As I went through the interview process and had a few different opportunities get to kind of final round stages, it was really in that time that I kind of nailed down on actually bulge bracket being a good fit for me. The type of optionality that it provides, the type of springboard it could provide, I felt like would actually put my career on the better long-term path, even if potentially the learnings might not be as good as what I might be able to get at a middle market or a boutique bank. I don't know if that characterization is entirely true. That is what I thought, at least at the time. I don't know. Yeah, I don't know if that necessarily holds true today, but that was the thinking and the guidance that led me to Goldman Sachs.
Yeah. Well, and that's a common trope, honestly, that I see with the students that I'm coaching as I'm helping them figure out like their why invest in banking and their why this bank. A lot of the times I say, okay, if you're going to a middle market bank, like you're probably going to have more responsibility early on in the deals, just because like there are fewer levels of bureaucracy and review, and the deals are smaller and the velocity is faster. And then that means that like you're just going to have a lot more autonomy and a lot more reps, and you're going to be able to like build the model earlier than you would at Goldman. And to some extent, like I'm very curious to hear your perspective, but from my perspective, working at an elite boutique where there was like a bulge bracket-esque attention to extraordinarily detailed, like multi-billion dollar deals, like that was kind of true. Like the chain of command at some of the banks that I worked at was like, I wanted to send an email to the client. I had to send it to the associate sent it back to me. I sent it to the VP sent it back to me, and only then would it go. And the pro of that is that like I get to see those iterations. I get to like really make sure it's 100% excellent, but you get fewer shots on goal. And so in retrospect, like how was your experience at Goldman Sachs relative to the mid-market that you were expecting to join? And like what was that learning process like?
Yeah, well, I mean, the fact that you even emailed clients is amazing in my mind. That was not even something that was part of my role, to be honest. There was later on in my position at Goldman, I did have more customer interactions. I did go to more live meetings with our VP, going up and down Manhattan and traveling around a few different places. And those were really great learning opportunities. But I guess the way that banking turned out different than what I thought was I did think that there might be more financial modeling involved, and there would be a lot more playing on the hard skills that I had gained with my degree in finance. I thought I would be relying on those quite a bit more than I was at first. Don't get me wrong, the degree in finance was a great head start compared to some of my colleagues who had other degrees that weren't in finance. I was actually educating quite a bit of my peers on different financial aspects and principles that they didn't understand. And so I do think maybe I'm not fully appreciating how much that benefited me. But I do think it was really the soft skills that I really gained the most while at Goldman. To be fair, it was also my very first job. I mean, aside from mowing lawns in high school, like literally Goldman Sachs was my first employer. My first paycheck came from Goldman Sachs, which is kind of weird to think about. And so I really was just gaining a lot of kind of the basic corporate skills around communication, how to write good emails, how to understand the priorities of the people that you're working for and that sit above you, to make sure that your work is aligned with their underlying goals, how to pay attention to detail, how to build good presentations for clients. Like there was a lot of soft skills that were really important and that I really took a long time to build, that came in much more that became much more important than I would have thought from the beginning.
Gotcha. Yeah, well, I love that, and I can sort of imagine a title right now, like lawnmower translates to Goldman Sachs or something like that. There's an incredible transition period in there that just a massive glow up. Nothing against mowing lawns, but then the second thing that you really touched on is one of the biggest misconceptions in investment banking is that it's about financial modeling. And when I coach students, like I never teach them financial modeling until they've already gotten the job, because in all of the hundreds of students that I've worked with, none of them have gotten a financial modeling requirement in their interview process. And then once they hit the desk, like a lot of it is just building PowerPoints and like simple Excel stuff. It's not like complex financial models until much later in your analyst or even associate years, just because that's not like the first year analyst job. So I really love that you clarified that a little bit. It sounds like you agree?
Yeah, completely. That's exactly what I saw.
Mm-hmm. Yeah. Well, and then one other thing I wanted to return to is the concept of a finance degree relative to other degrees. Obviously, many people who want to go into investment banking, they study finance, they study economics, something like that. But I've also heard a lot of really powerful perspectives of saying, okay, you're going to learn all that on the job anyways. Why not just go and study something else that's more interesting to you, or like a really cool STEM field or something like that that teaches you how to think? What's your response to that?
I would say part of your motivation should be, and I know this is a little bit gamey, but like part of your motivation should be is like, how can you just become a well-rounded, interesting person? I think people coming from STEM degrees can be very interesting to people who are in banking. People who are coming with a background in computer science going into banking, I think could be very interesting, especially in this day and age where people with those type of skills can potentially do a lot more than their colleagues, just because you're operating on a computer all day, and being an individual who understands coding and how to build software can potentially get a lot more done. I think the other motivation you should really be thinking about is just, what really interests you and what makes you an interesting person and what are you passionate about? I think really, especially for the bulge bracket banks, I think they don't care as much as I think people think about this specific degree that you have. And it's completely true that you will learn the finance on the job. There's certainly some prep you can do ahead of time, and you should do ahead of time, that you can tack on to your existing knowledge. But for the most part, I think people should just pursue what they really want to in college, and they can find any angle into investment banking from there.
That's super interesting, and like it kind of aligns with what we've heard from others. But at the same time, like I also studied finance, and so I also found it to be a little bit more intuitive, perhaps, than other people, and that matters a lot. Like the speed at which you learn is probably the most important thing. But if you can start a little farther and then learn just as fast, then you're just going to be that much farther ahead of the peers. You're going to be that much more likely to get the top bucket analyst bonus. And that's going to be the sort of people who end up at the best PE shops, the best exit opportunities at the top tech startups. And so it does set you up well for success. But like you said, there's a trade-off to that. And if you can learn those skills elsewhere, then it might really benefit you to go and become an interesting, well-rounded person that can build relationships and interviews and what. And so I wanted to ask a little bit about like that journey for you, because as you said, you were targeting mid-market banks, which is awesome. Mid-market investment banking jobs are great. Like you're going to earn a ton of money. You're going to have a very prestigious, interesting career, learn a lot. But was there ever a moment during recruiting when you realized, oh crap, like I'm actually going to do this, and I'm going to do this at like Goldman? What did that feel like?
To be honest, I feel like there are certain people who are in a position to be picky. I don't know necessarily I'm not super in deep with the current recruiting processes at bulge bracket banks or middle market banks. But from my understanding, for the most part, people don't have an infinite number of choices when it comes to choosing what bank they're going to work for. You can choose what you target, but you're not going to be able to choose exactly which one you go with. It really depends on what offers come through, right? I knew it was I decided to go full steam ahead on investment banking a little bit late, like maybe literally like two weeks or maybe a month later than some of my peers. And that put me off to not a great start when I was doing my initial interviews. And it was this opportunity with Goldman that happened to come through a little bit late stage when they were looking for a group of analysts to fill in the class that they needed to grab, that I was luckily able to get that position with Goldman. But it really is, to some degree, luck.
Yeah. Yeah, that's fair. And I've worked with some incredible students before that came in with a little bit of, I don't want to say arrogance, but like perhaps overconfidence. And they said, I'm only going for these top 5 banks, these top 5 hedge funds, these top 5 private equity firms, whatever the case may be. And they only apply to those firms. And, they're really prepared. Like their technicals are great, their behaviors are great, they've networked, maybe they have family in the industry, but they get an interview on a bad day, or the person, for whatever reason, spilled coffee on their laptop that morning, they're a little pissed off. Or maybe they just didn't wear the right color tie and someone thinks that they look silly. These are random things that can result in not getting the interview. And so my advice to all candidates that I'm working with right now is just apply to everything. You're going to be more competitive for Goldman Sachs if you've been interviewing at XYZ other mid-market bank than if you hadn't. And if Goldman Sachs doesn't work out, you're going to have a great job and a better career, because the binary between getting into banking and not getting into banking is huge. Now, you also said something that's a little scary, which is you said that starting investment banking recruiting even 2 weeks late set you up at a huge disadvantage relative to your peers. Tell me a little bit about that and how did you catch up?
Yeah, I feel like it was, if I had been preparing even just 2 weeks earlier, or especially a month earlier than what I was, those first interviews that I did with Credit Suisse and Lazard and JP Morgan would have gone so much better. I really did kind of hit the ground. I kind of decided just just slightly late compared to some of my peers who were a little bit more prepared going into those first interviews. And so I'll be honest, I kind of botched those interviews. There was a number of things that I wasn't fully prepped on, and I wish I really was more prepared than I was. I mean, by the end, having gotten in enough reps with different banks, and by the time the opportunity with Goldman rolled around, I feel like I did very well through those processes and was able to get the offer. But if I was more well prepared, I could have gotten an offer sooner, I believe.
Mm-hmm. Yeah. Well, it sounds like all's well that ends well to some extent, because the acceptance rate at Goldman Sachs, I don't know if you know it these days, but I think last year it was something like 0.7%. And so getting into Goldman today is harder than getting into Harvard. And so you must have actually cleaned up pretty fast in those few weeks where you're trying to catch up to get up to speed and whatnot. But you also were working with the disadvantage of not coming from Wharton or NYU or IU Kelly's investment banking workshop or something like that. You came from a semi-target school, a good school, but BYU, where you went for undergrad, isn't known necessarily for investment banking recruiting yet. That's changing, and I think that there's way more candidates that are incredible quality than there used to be. But at the time, especially, it was a little bit of a scrappier process. And so what was that process like recruiting from a semi-target school?
Yeah, it was really based around networking. It was really leaning into the alumni that we had at different investment banks, getting on calls with them, doing the coffee chats, actually flying out to New York or San Francisco and doing these little networking treks that our school would put on. Building out that network got me pretty much every single one of my first interviews. Doing a cold applying to these positions, I think only got me maybe one interview in total. It was really having put a face to the name, getting in front of people who were there as analysts or associates at the bank who could push along my resume and get me into a first round. That was extremely helpful. And that's really what I needed to lean in on, because do it from a cold start, from a cold resume application. Yeah, I think coming from Brigham Young University, there's going to be few banks that are going to really look at that and want to even do a first interview. So really leaning into that.
Mm-hmm. Yeah, and I think that has changed a little bit in the last few years. But at least in the time when we were recruiting, there definitely was a little bit of a sense of you've got to build those warm relationships, otherwise you don't get the interview. And to be fair, I think that's even true for the candidates that do go to these top Ivy League schools and stuff like that. I've worked with however many number of students at Wharton that just get rejected from a ton of processes. And part of that is it's a double-edged sword to go to one of those like absolute target schools, because not only do you have these incredible resources and like a brand name and people know what to look for, but you also have 300 of your peers who are dead set on the exact same thing you are, and they can only accept 2 or 3 candidates per bank, right? So a little bit of a pro and con. But
it's true.
Let's switch gears a little bit and talk about what it was actually like as an investment banking analyst at Goldman Sachs. And so when you landed on the desk at Goldman, what surprised you about the day-to-day reality of the job?
Yeah, how much I was in PowerPoint, really. I did not expect to be in PowerPoint so often. And but here's the thing, like investment banking really is a sales position, at least at the levels of the VP and the MD, right? Really, the top VPs and MDs are really good salesmen. They build really good relationships with other companies that could potentially be clients when it's time to do an M&A transaction, or it's time to do an IPO, or do a leveraged refinancing, right? These people at the VP and the MD level really have really good sales and relationship building experience. And they really rely on the analysts and associates at the firm to be able to build the knowledge base and the presentations that they go in with, that they're armed with when they go into conversations, such that they can come off as being really sharp. And so a lot of that does come down to presentations and reports and pitch decks. And so putting those together, spending the time to make sure they're really sharp, the iterations back and forth where you put together a pitch deck, send it to the VP, and then get a markup and need to make edits on the fly. I was not expecting that to be as much of the role as it was, but it was obviously a very good skill to learn. And yeah, that's what I'd say was maybe the most surprising about the day-to-day work.
I love that. So the most surprising thing about Goldman Sachs as an analyst is how much time you spend in PowerPoint. That's really hilarious, and honestly, it captures the investment banking role quite well, because that was very surprising to me too. And in retrospect, it makes sense, because as I worked my way up from the analyst level to the associate, senior associate, VP levels, when I looked back at some of the models that I was building, I was like, ooh, I don't know if I'd want to do a $20-30 billion deal based off of a model that my 19-year-old self was building during a summer internship or something like that. And so it does make sense why, but it also is a little bit of a disconnect between the glamour and the glitz and the expectation of investment banking and the reality that, in fact, you've got to start out sort of doing the most basic roles first and working your way up until you're able to actually get the stuff that people are willing to give you the reins for. And so as you were thinking about...
I'm just going to cut you off there really quick. I think that's exactly right. It's the building the trust that you are a intelligent individual who actually cares about the work. Let me say this. This, I think, is the most important thing for any analyst at an investment bank, is the capacity to care about the work that you're doing. I think if I could go back in time, I wish I would have shown more care in my work, and I wish I would have cared more about the work that I was doing, because that is really what trickles up to the associates, the senior associates, your VP. When they can tell that you care, they know that you're going to put in the work to make sure you get it right. They know that you are the type of person that they can trust, really. So that's what I would say to myself going into banking, is just care more, show that you care, and that will go a long, long way with the people that you're working with.
So unbelievably true. And I don't think as an analyst I realized how much the people above me cared. Because to me it was just I'm working on a deal, and they're just putting stuff in the Wall Street Journal, easy peasy, $1 billion deals left and right. This is great. And I was spoiled. I was in an environment where I didn't know that wasn't normal, and I didn't know that wasn't like the common experience. And so when I looked at like how much my associates and VPs cared, they were like, oh, like you didn't put a footnote period, and like you didn't italicize this word on page 5 in the third sub bullet. And I'm like, oh, come on. But then like in retrospect, like if you're working on a deal that big and you're generating hundreds of millions of dollars of fees, like you better make sure that your italics are right. Like everything needs to be perfect. And that care, like it just feels so good as a senior or sort of like mid-level person when you know that the person below you cares as much or sometimes even more than you do, which is great.
Yeah. I mean, especially if you're one who is looking to make a career out of investment banking, which plenty of people do, right? I think that is the number one thing that is going to set you apart is that you actually care about your work. And that doesn't mean that you never make mistakes. It's that you learn from them very quickly and that you show intellectual curiosity and you actually seek the type of feedback that would lead to improvement. So again, showing that you care is what's going to really set you apart and make you have you build a long-term career in banking.
Yeah. Well, and so to that note, you make mistakes in investment banking. It's inevitable. Even if you are working on $1 billion deal, sometimes there are things that you slip. And so tell us a little bit about some of the mistakes that you made and like what you learned from that at Goldman. And like, how do you handle that? Do you just say, hey, brush it under the rug, or do you own up to the mistake? Do you talk with your associate? Like what mistakes did you make at Goldman? How'd you recover?
I guess one of the bigger mistakes that I might have made and that I did later like fess up to was I kind of snapped one time actually at my senior associate. I was in a position where I had like 3 different deals that I was working on. Each one was managed by a different VP, and I was really getting pulled in multiple directions. And I remember just being under a high amount of stress. And I remember the senior associate called me up and he was like, hey, we really need to get this done. We need to get this out the door by this time. And I'm like, okay, great. Is it okay if I get to you by this time? And he's like, no, that's not going to be good enough. And then he's pushing me to like work faster. And I eventually got to a point where I kind of snapped at him. I'm like, dude, I can't deal with this right now. I'm going to hang up the phone. And I just hung up the phone. And I remember that being like a pretty big, it was very memorable, right? It was, and it was something that I'm not like proud about. And I circled back to him by the end of the day. I'm like, hey man, I'm really sorry. I didn't mean to whip that out on you. I was feeling a lot of pressure and I'm sorry, like I should not have done that. And he was very understanding. But it was obviously something that, especially as an analyst, you shouldn't be doing, and you should be able to handle your shit a little bit better. But yeah, I think owning up to it is the main thing. That really shows that you care. If you don't own up to your mistakes in a tasteful, tactful way, it doesn't show. It shows a lack of care. And I will say there is a way to do it tastefully where you're not just being so penitent and like groveling, and while also just being very clear about what you did wrong and what you're going to do better.
Mm-hmm. Yeah. Well, so first off, that is very, very gutsy to hang up on your associate. That I just like, that's an image that's going to stick in my mind for the rest of this hour here. And second, I think that you're totally right that like when you do make a mistake like that, and honestly, I don't even know that was quite a mistake. Like if you were truly under pressure, like maybe you could have handled it better or worded it differently, but you could have said something like, hey, I'm so sorry. I really do need to get these other 2 projects out the door. So I've got to hang up the phone right now. I've got to get like off the call. I'll talk with you as soon as I can. Does that sound good? And then just hang up. But like realistically, fundamentally, like you were doing your work, and it was just like the way that you communicated it that maybe was a little too rough. And so I think an apology like does go a surprising way, especially in banking where people aren't known for apologizing. They're not known for being soft. They're not known for ever owning up to a mistake. If you can do that, that sort of soft skill does set you apart. And that goes back to what you were saying earlier, that like a lot of what you develop as an analyst is the professionalism, the soft skills, the social skills to succeed. So.
Yeah. Yep. Exactly right.
But tell me a little bit about some of the specialties you did. So backing up a little bit, at Goldman, you weren't just working on normal M&A deals. You were specifically emphasizing fintech and asset management. So what drew you to that? And do you still do anything related to that?
Yeah, well, so I was actually pretty dead set from the start to be within a TMT group. I really like tech, and so when we were when once we accepted the role, the group of analysts that were in the pool were then able to say what their top preferences were for their group, and I put TMT up at the top. I put FIG, Financial Institutions Group, as number three, and I later find out that I got into the financial institutions group, which was my first choice. And I'll admit, I was a little bit disappointed. However, I did quickly find out that FIG within Goldman, because FIG is such a big group at Goldman, they have additional specialization. They have a group focused on banking. They have a group focused on insurance. And then they have another group that is for financial technology and asset management, and or FTAM. And they specifically split it up that way because the ways that insurance companies are valued, like the way you do valuation for an insurance company versus a bank, are very special. Asset management is another category that's very unique, as well as fintech. And so they grouped those two together. And yeah, that was my focus. Quite a bit of asset managers. The largest asset managers in the world were our clients, and then a few different fintech startups that had kind of made it to later stages and were coming up close to IPO, or were looking at, and in some cases, looking to do a debt restructuring, as well as market makers. The Nasdaq was one of our clients within fintech. Those were the types of clients we were covering.
Interesting. Okay. And so, so wrapping up the Goldman chapter, because we've got a lot to move on to in terms of the venture capital, the operating side, entrepreneurship. Tell us a little bit, like overall, when you thought about Goldman, and you look back at your experience there, like what differentiated the analysts who succeeded and thrived versus those who merely survived?
I think it comes down to caring. I think the analysts who really cared and really put in the time were the ones who really thrived. It's not something that you can force on yourself, though. Like, if you don't care, you don't care, right? So at the end of the day, I think it's not something that you can really fake until you might be able to fake it until you make it to some degree. But at some point, you're not going to be able to fake it. And if you don't care about the work that you're doing, or if you don't find it intellectually stimulating, then it might not be the right long-term path for you. And I think that's what I discovered for myself. I don't think I did well in banking for sure, don't get me wrong, but I don't think I really enjoyed it, and I don't think I deeply cared the way that the best analysts did. And it was due to the type of work that you're doing day in, day out, and my desire for entrepreneurship and investing that really was what drove me to other opportunities in the end.
Yeah. Well, and it's one of those things where like very few people are cut out with the true mindset of a banker, where they just want to chase deals all day long. And there's a lot of people like you that like are good at it, and you're smart enough to like get by, and your social skills are good enough to like get on the good projects and do a good job with them, work with clients and whatnot. But ultimately, to you, it sounds like it was a means to an end. Your end goal was always entrepreneurship. You did banking because of the optionality, the credentials, the skill set it gave you. And then when you had the opportunity, you took that and you ran to something that is the golden exit path from investment banking, which is some form of private investing. And for you, that was venture capital. And so tell us a little bit about what motivated that transition specifically. So you had entrepreneurship as the end goal. You were at Goldman Sachs. Why not jump to entrepreneurship? Why stop in venture capital?
I didn't feel at that point in time I had any particular idea that was really inspiring me or motivating me. I feel like if there was something on my mind that was like something really burning in my heart, that could have been the right next path, is to go and hop off from Goldman, potentially raise capital and do my own startup. But at that moment in time, it wasn't really there. It was more a matter of, how do I continue to build out my skill set? How do I get more exposure to different industries, different problems, and see where I might eventually want to build a company for the long term? And I definitely saw investing as the way to get there, due to the exposure to a wide range of industries that you get as part of that role.
Yeah. And so with venture capital, it's a very different job. You're not out there just building PowerPoints for clients, and you're not out there building financial models for clients. Like, you're a primary investor making decisions with money that like is your money from LPs. And so how was that mindset shift for you as an analyst going to an associate in venture capital, like from executing deals to evaluating founders, evaluating markets, and thinking through that intellectual thing? So simply put, what was the difference between being a Goldman analyst and a venture capitalist?
It really does come down to ownership, right? Like you said, you are the primary investor when you are a VC. And you are the one who is financially liable, financially on the line for mistakes that you make in your work. Versus banking, you're acting as an advisor, right? You're not the one who's making the final decisions. You're not usually risking capital on the bank's behalf. In most cases, you are simply acting as an advisor and a guide to your clients. And obviously in the world of investing, that is not the case. You are the one who owns the money. You are the one who is on the line for everything.
Mm-hmm. Gotcha. Yeah, that mindset shift to ownership was honestly what personally drove me towards private equity from investment banking. Like I loved investment banking. It was a great time. It was way too many hours, hurt the social life, but like on the whole, like I actually quite enjoyed the work and quite enjoyed the job itself. And so for me though, the reason that I decided ultimately to go to the buy side was because of that exact point where intellectually I wanted to find capital T truth about a business. I wanted to say like, what is the quality of this business? Is it a good investment or is it not? And that was a much more interesting question to me intellectually than the question of how can we sell this business?
Yeah.
Or how can we like paint it in the best light possible? It just felt more intellectually honest to me. I don't know if that was true for you too.
Yeah, I guess kind of, yeah. It's like I think the types of questions and the types of problems you are asked to solve as an investor are, to me, much more interesting problems. I felt like often in banking, it could feel like at times, and especially in the early days, but not always, a lot of the questions that I was trying to solve for was, how do I do this presentation in the way that decreases the chance that it'll get a write-up from my VP? Versus the question about like, I wonder if who's going to win in the LiDAR space. I think that's a much more interesting question personally than how do I decrease the chances of a red line. That wasn't always the case in banking, of course. There was like later as you get along, you get to ask more sophisticated questions. And especially as you care about your work, you get to ask more interesting questions. But that was, I had a similar experience to you.
Yeah. Well, and I don't mean to badmouth anything about investment banking. I really loved the banks I was at. They were top-notch institutions, sure. But like I remember there were a couple times when we were working with companies, and I remember like one company in particular. I was looking at the metrics and I was like, this isn't very good. Like this company's not doing that well. Like the retention rates were like, the growth rates were like, and going down. And then in our deck, like the associate came over and was like, Max, like, why did you say that the retention rates are and the growth rates going down? Like, you should be saying, no, like, we're just about to pivot into this next chapter. It's going to be up and to the right. The retention rates are increasing. Look at this data that we've heavily massaged. That's true, but still heavily massaged. That's going to paint into the right direction. and I was like, dude, like, do you expect me to say this with a straight face? And like, yeah, that's your job. Like, that's your job is to like paint it as well as you can. And honestly, I don't even think it's like that intellectually dishonest because the people on the other side of the table, they know what's happening. You know what's happening. Like everyone gets it, but you still got to communicate it in like a slightly unrealistic way sometimes,
Yeah, it's totally true.
What I will say though is that venture capitalists are not known for being down to earth and realistic all the time either. And so what was that like
for
sometimes working in VC where there was like there's this like tendency for venture capitalists to like just be a little too bullish about a lot of different things sometimes?
I think, to be honest, I think my experience with it in VC was a little bit unique in the sense that the type of firm I was working with had more of a background and a feel that emulated maybe traditional growth equity or even private equity versus a traditional like early stage VC fund. There was quite a bit of rigor in the financial modeling that we did, quite a bit of rigor in our due diligence, which later I found is a kind of a little bit unique compared to other VCs within Silicon Valley. Our firm was kind of a bit of a unicorn in a lot of ways. So I don't know if that's necessarily the answer you're looking for, but that's kind of how I evaluate it now from the outside.
And so,
Sure.
so like you're saying, every VC firm's different. You know, every firm has a different degree of intellectual rigor or like social focus versus math focus versus industry focus. And so you can't paint with too broad of a brush. And it sounds like you were at a pretty unique place. And so you were at G2VP, which is a very, very respected, very well-known VC firm, but it sounds like it was a little atypical in some ways. And so tell me a little bit about how your investing philosophy was shaped by that and what that looked like.
It was so fundamental to how I think as an investor, and I think even as an entrepreneur, in terms of what paths I pursue and how to just be a better decision maker in general. A lot of the questions we would ask ourselves during due diligence on a company revolved around questions such as, what do we need to believe is true in order for us to move forward on this investment? What do we need to believe is false for us to move forward on this investment? What do we need to think the upside cases? What do we need to think the downside cases? What do we need to think the middle cases? And all of the questions that ensued around that base set of questions was really what drove all of our due diligence. And really those same type of questions have stuck around with me today. Even in my current role, we often ask ourselves the question of like, what do we need to believe is true for us to continue down this path with our current iteration of the product? What do we need to believe is false in order for us to continue with the product as it is today? So the framework, the investor mindset that I gained at G2 Venture Partners has really carried with me throughout my whole life, and I'm sure will continue with me throughout my entire career.
Yeah. Yeah. Well, that's great to hear. And so where do you think that like Wall Street and Goldman prepared you well for that versus were there any gaps where you showed up on the job and you realized that like you didn't have what you needed to succeed there?
I really feel like it was the soft skills of being able to communicate professionally in a high stakes environment. Those were the skills that really served me well. I think the finance related stuff, I gained a little bit more financial knowledge on the job with Goldman, but I feel like my base, having a degree in finance, got me 80% of the way there when I hit the desk in venture capital. So yeah, that's what I'd say to that.
Mm-hmm. Gotcha. Okay. And then when you think about how your relationship with entrepreneurship was impacted by venture capital, like fast forward a little bit, like we know that ultimately you went and you built things and you went into the operations side of things. If we back up a little bit, how did spending time on the investing side influence your later desire to actually go and operate? Was this a period where you're like, oh, maybe I should stay in investing? Or did you always realize like, no, actually, I still want to build this career in operations and entrepreneurship?
There was a desire to continue as an investor. And when I was looking at the opportunities ahead of me, I was kind of split between going and joining another VC firm or going onto the operational side. I think eventually what drew me to want to go into operations and entrepreneurship was being able to get more down to the ground truth of how companies actually operate, and not just be able to like theorize about it as a VC. Because really, once I did make the hop into operations, it was really crazy how little I understood about how companies actually operate. It was rather shocking, in fact. And I wish to some degree that I had that type of operational experience before I had gone and done venture capital, because I think I would have been a much better investor if I had.
Mm-hmm. Yeah. And so tell me a little bit about like what you learned as an investor, though. So I hear you, and I actually think that you're totally right that some of the best investors are people that have already done the entrepreneurship side of things and then carry that skill back to investing. But what did you learn about pattern recognition as an investor that then made you more successful as an operator?
I think I learned in VC how to think in bets that then put me in a really good position as an operator. In VC, you're making bets all the time about what company is going to work out versus not. And you see over a long horizon whether those bets play out. And being an operator very much relies on thinking in bets, thinking about what you're making a bet about a product and a problem that you're trying to solve in the market. And you need to see whether that bet plays out, and you need to scrutinize whether that bet is playing out the way that you think. So I'd say that was probably the biggest skill that I gained as an investor, is just how to think in bets.
Mm-hmm. Well, and I know that you are someone who thinks probabilistically. Like, you've got a good understanding of statistics, a good understanding of thinking outside of black and white, binary, yes or no. And so tell me a little bit about, like, more about what you mean there. And maybe you can draw in some of the work that you've done with like prediction markets and things like that as well, to help understand what is the best way that like entrepreneurs and venture capitalists should be thinking.
I think it's a matter of, you have a hypothesis that you're wanting to test. It's a very scientific approach to everything in life. It's a scientific approach to investing. It's a scientific approach to problems that you're trying to solve within the world of entrepreneurship. It's asking yourself the question of, what are we seeing in the market? What do we know is true from what we've seen in the past? Where do we think things are going? What do we think is, what hypothesis do we have about where the future is going, or what the market needs? And then starting to do the things to prove out whether that hypothesis is correct, do the testing. So when it comes to investing, it's a matter of really going in deep with the potential investments, talking to their customers, seeing whether the trend that you have started to see play out is actually playing out in the real world. And then when it comes to the world of operating and entrepreneurship, it's a matter of coming up with a hypothesis as to what the market needs, testing it out with that customer, trying to solve that problem. And if it turns out that your solution for the problem is rather sucky, then you need to adjust and pivot and try something else. So really, it's framing your thinking in terms of what you're betting on, what your hypothesis is, and going from there is the framework that I'm speaking about.
Mm-hmm. Gotcha. And I think that's generally like a very good way to approach life, is just to think in terms of probabilities as opposed to binaries, because we exist in a world where there is an infinite number of outcomes between extremes, and some of them are likely, some of them are unlikely. And
yeah, well, I guess in another way, when speaking about specifically probabilities and not falling into binary thinking when it comes to investing, is we assign a probability to like when we do our financial models at G2 Venture Partners, we would have a base case, a upside case, and a downside case. And we would assign probabilities to each of those different cases based off of all of the conversations that we had with that potential investment's customers, talking with people on the team, and then understanding the real levers based off of which that company operates and how they can achieve financial success. And based off of all those conversations, we can tweak and fine tune what we think the probability is of the company hitting that base case versus the upside case versus the downside case. And then that amalgamation of all those probabilities comes into what we think the company should be valued at. And then that determines what we put into the term sheet. In the world of entrepreneurship, I think, yeah, you have a hypothesis, and you do usually phrase it in terms of like, I think there's an X% chance that this is true. Let's go and try to prove it out. And the more customer conversations you have, the more times you're able to demo in front of customers, the more credit cards you're able to swipe for people paying for your product, the more you're able to prove out, and the probability increases higher and higher and higher that you're correct and you're on the right path, right? And you actually go and collect evidence that then makes it so that you're to a point where you're very unlikely to be wrong, but never 100%, right? It's never a 100% chance. It's never a 0% chance. It's always somewhere in between.
Yeah. Okay. Well, so again, we've talked about a lot of things so far. We talked about the investment banking recruiting journey. We talked about Goldman. We talked about your time in venture capital. There's one more chapter before we get to the entrepreneurship journey proper, which is you then went and operated in a variety of companies. And so you worked at Via, you worked at Polyatomic, so a bunch of like really high quality, fast growing startups and things like that. So why did you decide to leave VC for an operating role? And again, tell me a little bit about why you delayed the entrepreneurship journey some more.
Yeah, I decided to go into operations because I wanted to be on the ground, actually seeing what it's like to operate and build a company. I felt disconnected from it as a venture capitalist. I understood at a high level what were the metrics that a company should try to strive for and hit in order to be attractive to investors, for sure. But the day in, day out strategy of how you run a company and win a market and solve an interesting problem was still completely foreign to me. And I recognized that. And so I wanted to have that experience. And that leads into your second question of like why I waited to become an entrepreneur. I, for one, didn't feel like I was ready because I just genuinely did not understand the nitty gritty of what it takes to run a company. And I think jumping straight from VC into that would make me less likely to be successful. I think I was also still in a position too where I did not yet have a particular idea that I was super passionate about, wanted to go full steam at. And so I thought I saw the operating world as giving me an opportunity to be able to get closer on the ground experience, see more real world problems, and then hopefully between building the skills, seeing what the world really needs, I could come up with the right idea.
Okay, I want to return to that because that's been a theme at each stage where you're saying like, I have the skill set I could probably succeed at, but I'm going to keep developing new different skills while I wait and think about ideas that I actually want to implement. So there's a beautiful patience to that where it's like saying, okay, like I'm not just going to rush at something and go fail unless I believe that it's like actually worth rushing at. And so we'll come back to that in a second. But while working an operator, like you worked in a bunch of different roles, like you worked in growth and strategy and operations. And so there was a ton of different stuff that you did. And the way that I look at your career is you kind of became like a Swiss Army knife. Like you were able to do everything. Like you did the investment banking analyst role. Like you can do PowerPoint, you can do Excel. You did the venture capitalist role, so you can analyze a business. You can understand what goes on in them. And then you went and did all these operation things where you're able to like grow a business and you're able to think about strategy and like execute upon it. And so tell me a little bit about what the strategy here was to develop so many different skill sets. What was the thinking there?
Well, I definitely knew that I did not want to be pigeonholed right off the bat. I knew that going into a role such as like, I don't know, customer success, for example, or going into sales wasn't really the right fit for me or my skill set. I knew that I needed to gain a broad view of a company and all the problems that a company faces in order for me to build towards the point where I could go and start my own company. And so I saw the operations, growth and strategy type roles as being ones that would give me, again, it comes almost down to optionality again. It gives me the most optionality into other things that I might want to do in the future, but really gives me the broad exposure I wanted to every facet of the business. And I'm really glad. I didn't really appreciate at the time when I was making that decision to go into that first role, which was a strategy and operations role, how good of an experience that would be to help me build my business acumen, really.
I totally agree. Like that's part of why I loved having a variety of different like operational and finance experiences is just to build the perspectives, like build understanding of what roles are and like what people do and things like that. And so, in college, I took a sales job and, after college, I did investment banking and private equity where I looked at a variety of different industries and a variety of different types of businesses. And then, at Stanford, I did internship at like, a random SaaS company that was pretty cool and like wanted to like learn how to do operations and chief of staff type role. And so just over time, you keep collecting these skill sets that, yeah, sure, they might get rusty, but fundamentally you're just going to grow your capacity and be able to do those things a little bit more over time. And that's critical for the CEO role and the entrepreneurship role, where you're trying to basically do everything in a business and be able to understand everything that's going on at the same time to some extent. And one thing that was particularly cool with you is you were able to work in the office of the CEO at some of these like incredibly successful startups, working directly with the highest levels of decision making. And so you'd seen this from the outside as a banker and you'd seen it as a venture capitalist. What did that look like from the inside, working with the CEOs of these incredibly successful businesses?
There is a lot of small things that I learned about what it takes to be a CEO, especially around how to delegate tasks, how to first hire people that you trust and hire people that you know care about the role, and then how to properly delegate tasks and have clear running lanes for people to operate within. That was something where I saw the people that I work with make mistakes, but also did very well at. And so that was, I think, one of the most crucial learnings working with the CEO, is just understanding how to bring in the right people and set them in their lane and get them running.
Mm-hmm. Yeah, there's an analogy that one of my professors at Stanford used to say, where he said that your job as a business owner is not to do anything, but to get the right people on the bus. He says you're not even trying to figure out where to drive the bus.
Exactly.
He says that you're trying to get people on the bus, and then you figure out where to drive it. And so in the thinking there is just that it comes back, like you said, to people. It comes back to the having excellent ideas and excellent brains and executional capabilities pushing towards problems. And so it almost like matters less what problem exactly you try to solve than that you have the right group of people working towards it. And that's a philosophy that I've really tried to adopt. I think that so many entrepreneurs and operators spend way too little time thinking about the hiring and firing processes than they do about the operations of the business at its core. Let's switch over to the next and final chapter here, which brings us up into the modern era, where you've gone and you've done some more entrepreneurial things. Like you've been a CEO and a founder of a business, and you've been like very early in on the ground with another. And so tell us a little bit about what happened next, and what was the strategy coming out of some of these operating roles where you were in high level but not decision maker positions, into being like the actual leads of businesses.
With my next opportunity, I had decided to go and start my own company, DIY Solar. I was doing that on the side of one of my previous roles. It was something that didn't require too much time. I had a business partner that was able to handle a large part of the business, and I was able to grow that on the side until a point where I decided to go all in on it. And it was something that was kind of hedging a bet that I was making, right? It was hedging the risk by being able to build it on the side while having a full-time job. But the decision there was really, I had a friend that I made that was very passionate about solar. And I had a lot of experience within the world of solar by having invested at G2 Venture Partners. We touched alternative energy quite a bit while there. And I saw just a good business opportunity more than anything, that there was a gap in the market for being able to have a do-it-yourself option for solar, where people could go install it on their own roofs and save quite a bit of money. And it didn't require too much capital to get off the ground. It was primarily a marketing operation. And so despite, I would have never guessed at the beginning of my career that building a solar business was the direction I was going to go. But I saw it as an interesting problem, and I saw it as a good business opportunity more than anything. And so that is what made me start the business. And then eventually, when it got up and running on its own two legs well enough, decided to hop over and do it full time.
Wow. Okay, that's incredible. And so let's back up a little bit more. Pitch me on the opportunity. So you've been a venture capitalist on the other side of the table. Pretend that I'm your venture capitalist. Tell me, what is DIY Solar, and why should we care?
Solar is way more expensive than it needs to be. You are paying, as a residential consumer of solar, you're paying for the commission to the solar sales bro who's coming to your front door and trying to sell you on solar. You're paying quite a bit of money to the installer. And at the end of the day, you're talking about getting a payback on your money that might stretch 5, 6, 7, 8 years, if not longer. And it really is racking customers over the coals. In some instances, if you're in a very sunny area and you're able to get a good financing deal, sure, the economics work out and you can have solar. But for the vast majority of Americans, there needs to be a more affordable option that cuts down on all those unnecessary costs. And that is what DIY Solar is. The ability to self-serve, buy the solar kits, let us do the engineering for you. We'll guide you through the permitting process. We'll send you the all of the materials and the instructions on how to do it. You can install it yourselves. you cut out the commission, you cut out the installation costs, and you're getting solar for about 40% less than the national average, meaning you get a payback period of usually about 3 or 4 years. And with the government incentives, we've had some customers that have got it back as early as 2.5 years of payback on their investment. And another nice part about this business model is that there was no capital investment on our part. We have a partner who's out in Texas who could, once we did the engineering work for the project, they would pick and pack all of the materials together and send it to the customer, meaning we never had to put up any capital to buy the materials in the first place. So it was a very capitally efficient business model.
That's great. Okay, count me in. I want to invest. But you also scaled it very quickly. And so one of the most incredible things about this business is that you went from like not having a business to having over $1 million of sales in less than a year. And that, like, you know, that's a tremendous feat. Like that's actually really impressive. It's a really cool trajectory and something that I don't think I would have appreciated until I'd done more operations roles myself to see like how large of a scaling curve that is, especially for a business that requires like real hard assets. It's not just like some, you know, SaaS platform or something like that. And so how did you manage to scale so quickly?
Everything comes down to a combination of skill and luck, right? Nothing is 100% skill. Very few things are 100% luck. There are maybe a few things, but not too many things are 100% luck. Where it came down to skill was we had really good marketing messaging. We had really good sales channels and we pushed really hard. And my co-founder is just a very good salesman. So that's where I think it came down to skill. Where it came down to luck was it is already an established market in the sense of solar is not a new concept. People understand the idea of solar. And even the DIY portion of solar was not completely new. We weren't like starting from square one and having to educate people on the fact that this is even a possibility for the most part. The other thing was that California was undergoing a regulatory shift that made it so that people were really rushing to get solar installed before the end of the year, before a certain interconnection benefit was going away. So we were able to market to that opportunity really well and ramp up sales very quickly.
Mm-hmm. Wow. Well, congratulations. And I want to return to learning a little bit about some of the problems that have happened and the mistakes that you've made. And because I really enjoyed your story about Goldman, about the associate that you hung up on and what you learned from that. And I'm sure that in some ways, founding a business like this and growing it was equally stressful. And so what mistakes did you make early on in your career there that you'd warn first-time founders about?
It goes back to what I was saying before about being very clear about what your hypothesis is and what you're testing, going and testing it and being quick to pivot. I think during my time with DIY Solar, I was not quick enough to be very clear about what we're testing, measuring it, and then going back and refining it. I think if we would have caught some mistakes that then ended up compounding over time and making us so that we decided that we wanted to sell the business. But that is really, I think, what I would advise any first-time founder to do is just be very clear-eyed about what you're testing, being quick to test it, measure it, and adjust accordingly, and don't deceive yourself.
Mm-hmm. Gotcha. Okay. And so maybe just give us a little bit less of an abstract answer. Like, let's concretize that a little bit. And so what were you testing and like, how come it didn't get tested fast enough? And like, let's learn from it at a deeper level here.
Sure. I mean, to be very specific, one of the things that I feel like we had a hypothesis around, or at least not even explicitly had a hypothesis around, we just thought was a true thing that turned out to be false and put us in a bad position, was the cash conversion cycle of our business. We had assumed quite fundamentally that we put out X number of dollars into marketing. Mm-hmm. We have this much in sales costs. We're able to close this customer with this CAC, and that money would be coming back to us within a month of us putting it out. We put out $1 in marketing, and in 1 month we would have $1.20 back, right? Mm-hmm. That was kind of a fundamental assumption of the financial model that I made at the beginning of the business. And it turned out that cash conversion cycle, at least with the industry that the market that we were going after, was not right. It actually turned out that it took us quite a bit longer to collect money from customers, much longer than we thought. And so that kind of put us up and out in front of our skis in terms of working capital and the money that we had to work with. And us needing to take out some business loans in order to continue to fuel growth for the business, while not fully appreciating how long it would be for us to finally get back that money, reinvest it, and continue to grow. And so it put us into a point where we were kind of above our skis. We needed to stop marketing spend and wait for the money to come and trickle back through that we put out. But that having to put a pause on growth for the business was also a big hamper on us being able to pay ourselves and continue to put in our full time and focus into the business, to the point where we decided, okay, we have some interested buyers. Let's go ahead and actually sell the business rather than trying to operate it ourselves. And so that's what we're actually wrapping up doing today, is finishing up the transaction for selling the business.
Wow. Auspicious timing. Well, I won't ask about details about that, but we'll look forward to a press release here. So congratulations. I'm sure that throughout this entire process, you've learned a lot about like what it takes to be an operator and like what it feels like to be an entrepreneur. And so zooming way back to college, when you said, hey, I want to run a business, I want to build something. How did it feel to build something like this and then ultimately to let it go?
Yeah, as somebody who's overly self-critical and somebody who is a bit of a type A personality, it's very fulfilling to be your own boss and to drive your own destiny. It is also very stressful to not meet up to all the goals that you set for yourself and what you thought you'd be able to achieve when starting a business, right? So it really is a roller coaster. Being an entrepreneur, starting your own business is a roller coaster of emotions, from the successes, the opportunities, to the areas where you kind of fall flat on your face. Amazing learning experience. Would do it again 100%, and wish in some ways that like I could take the learnings that I have now and go back and retry it again. And so I definitely foresee another one of these entrepreneurial journeys in my future, in the near future probably. But yeah, it's a wild ride.
Yeah, the high highs, high lows, all of the above. And so what advice, going back, would you give to yourself when you were on the other side of the table? Like you've been an operator now, you've been an entrepreneur, you've gone through, it sounds like a sale process that you would have helped with as an investment banker back in the day. And you've gone through raising capital and contributing to the business in a way that you would have probably done as a venture capitalist or an investor or some other role. Let's say that you were zooming back to your future self or your prior self. Let's say that we're going back to the time that you were a Goldman analyst, you knew that you wanted to do entrepreneurship, and then you went on to venture capital and to an operating role. Like, what advice would you give to your former self who knew that you wanted to be an entrepreneur, but you're still in the world of finance?
Be open to opportunities that you didn't previously foresee. When you go into banking, you kind of have a vision of what your 10-year plan is. I think everybody who goes into banking is a little bit type A and has a plan of what their career should look like, what their life should look like. And I think you're going to very quickly be disappointed if you think that that's actually how it will play out. I think having a general sense of where you want to go and understanding what you're passionate about and what you really enjoy and where your skills lie is important. And having a good guess as to where that might lead you in life is, I think, fine. But I think you need to be much more open to opportunities, especially opportunities that will advance your learning and understanding of the world, and not be so dead set on some particular path, is what I would recommend to my earlier self, because I think that would have saved me a lot of grief.
I love that. Okay, well, so this is an incredible piece of advice, and I have one more topic that we need to cover before we synthesize this and wrap up, which is I've got to hear about your work in AI. And so what we haven't talked so much about is the fact that these startups that you've been working with have been intimately involved with the AI revolution, and in particular the one that you're working with right now, Anon, is considering itself the integration platform for the AI internet. And so there's probably very few people better that we could be talking to today than you about the perspectives of AI. And in particular, something that I get a lot from the people that I'm working with, the students who are trying to break into the financial services industry, is how is AI going to impact my job? So I'd be curious to hear your perspective as an expert.
I think the amount of information that you are going to be able to absorb as an individual in high finance has gone up dramatically with the advent of large language models. The ability to do deep research and get educated on new spaces very, very quickly has ramped up dramatically, which is an important skill for anybody. I'd say everybody talks about the steep learning curve in investment banking, and this is a tool that will allow you to come up that learning curve much more quickly. So if you are an individual who knows how to utilize those tools well and knows how to do prompts very well and understands what tools are out there on the market that you can use, you'll be in a much better position compared to your peers, and you'll be able to get over that learning curve much quicker. Fundamentally, whether there's an existential risk for people who are going into investment banking roles, I don't know. It could very well be the case that analyst and associate type positions within investment banks over the next 10 years might be reduced by artificial intelligence. But I think the fundamental skills, the soft skills, the human relation skills that are especially important when you get up to a VP and MD level are going to be just as important as ever, because at the end of the day, an owner of the business, which will more often than not be a human, they are going to be relying on human knowledge and human relationships in order to make these critical decisions rather than fully relying on AI, right? So I think there is the fundamental soft skills, the sales skills that are involved in banking and a lot of high finance are still going to be almost even more relevant in the future. Mm-hmm. But some of the lower level work, the grunt work in some instances, is certainly going to be reduced. And that might come with it a reduction in the number of total headcount amongst analysts and associates, if I were to guess.
Gotcha. Okay, that's very interesting. That aligns pretty closely with my own beliefs about this, where at the end of the day, at the highest levels, banking is a relationship business, and you need people to build those relationships more often than not. It might eat my words about that, but I think we're at least 5+ years away from me having a significantly different opinion about that. And so let's synthesize now. We've talked about a lot of different things.
Yeah, I think so too.
We've talked about banking, we've talked about recruiting, we've talked about venture capital, operating roles, entrepreneurship, and the advice that you'd go back and give yourself now that you've been through it all. And so to synthesize, across all these different paths, how did you think about optionality? At the beginning, it was extraordinarily important for you, but how did your thinking about the importance of optionality change as you progressed in your career?
I'm glad you brought this up because this is extremely relevant in the world of AI. I have always kind of considered myself a generalist and a Swiss Army knife, as you put it. And there has been times when I was switching roles, for example, where I felt like me being such a generalist put me at a disadvantage, where me not being an expert salesman, me not being an expert coder, me not being an expert marketer was putting me at a disadvantage, because it's often the case that companies might not know what to do with a generalist who has a lot of optionalities and who could fall into any one of these roles and do a good job, but isn't an expert in that particular thing and only that thing. So there has been times over the last few years where I felt like, oh man, should I have maybe just specialized and kind of picked a lane and ran in it? Would that have been a better career for me? And even up until maybe even mid last year, I thought I was starting to have feelings of regret around not becoming more of a specialist in one area and sticking to that one thing. I think my attitude about that has changed in the last 6 months, seeing how good artificial intelligence is getting at such a wide range of tasks. What I mean by that is I think generalists are becoming even more and more valuable where you can be slotted into any given problem and or can be trusted to solve it, I think those type of people will be valued more and more. I think about it in terms of just even my ability to code. Literally over the last few months, as I was mentioning to you before this call, Max, I've started to get quite a bit more into coding, and I'm starting to build out full-fledged applications from scratch, both for personal projects and for stuff as it relates to my day-to-day work. And it is becoming very interesting how it's blurring the line between what software engineers at our firm do, what product managers at our firm do, and what me, who as a person who leads operations at the company, do. And the value I'm able to bring to the table is suddenly quite a bit higher and allows me to do well in kind of whatever task I'm being put at in a way that other people who have spent their whole career specializing in computer engineering or computer science would not have the same advantage as. So I think it's a really interesting time to talk about being a generalist and versus being a specialist. And I think the world might be moving more towards generalists.
I love that. Well, I can't wait to see how that goes. So the last question I'll ask you before we do our wrap-up little section here is, how does it feel having jumped off the standard finance path and given up a little bit of the career optionality that you once had? Like when you were coming out of Goldman, and you probably could have gone anywhere. You could have done finance, you could have done operations, technology, you name it. Now you're an entrepreneur, you're an operator, and you can change that, sure, but like you've given up a little bit of that optionality. And so how does it feel having jumped off the standard finance path? Any regrets?
At times I've had regrets about jumping off the finance path. I think there is a piece of me that always thought I had a vision of where my career would go. And when I started investment banking, I did not necessarily think that this was the path I would eventually be on. Or at least it's not the path that a lot of my colleagues went on after starting investment banking. And so there was times where I felt kind of off the beaten path and unsure of where I was going and wondering whether it was the right choice. However, when you talk about optionality, I don't know if I feel like necessarily my options have been shut. It might be the case that if I ever wanted to get back into investment banking, I might not be on the right footing to be able to do that. But aside from that, I feel like the range of options I have in front of me are actually pretty wide, in part because I've chosen to become a generalist operator and can fall into a bunch of different roles. But if I wanted to go back into the world of investing, I feel like that is the door definitely open to me. I feel like if I wanted to go and start my own thing, that's the door that's open to me. I feel like if I wanted to continue to work with other high growth, interesting startups within the AI space, that door is open to me. If I wanted to go and work in government and policy, I think that door is open to me. But maybe that's my naivete and not really realizing that maybe those doors are potentially shut. But from my perspective right now, I feel like I have quite a bit of optionality, even more optionality than I did even before when I was on the traditional finance path to some degree.
Wow. Well, that's a very refreshing perspective, because a lot of students that I work with, they're scared of shutting off that optionality to do something that they're really excited about. And so maybe this is a bit of a breath of fresh air to say that, oh, hey, even if you are doing that, sometimes perhaps that can provide the optionality you're still looking for.
Nathan, thank you so much for joining today. Unfortunately, we're out of time here, but this has been an incredible conversation. We've covered a ton of ground, and this has been extremely informative. So thank you so much for taking the time, and hope you have a great rest of your day.
Yeah, thank you so much, Max. I really enjoyed this conversation.